Hello viewers, we'll be going over natural gas, my trade ideas for this week, and how did I develop my trade ideas. So let's start off with the technical analysis for natural gas. We are down 3.5% on the 1-hour chart. We were at oversold RSI and we have now reached to negative MACD. As for the 4-hour chart, we start to see a divergence and we bounce right off the 200 moving average, this green line. As for the daily chart, what we have here, if we expand out, we are nearing positive MACD and we bounce off of the 9-day moving average, this blue line. So as for UNG, for the trade idea of the week, I have here a position size of less than 1% of my portfolio, and the entry for bullish side is $10.03. We did touch around that level this morning, and the target to sell that position is around $10.80. So that is around, say, around this level right here. And as for stop loss, if natural gas does continue to fall lower, will be $9.84. On the other hand, if I were to take a short position, will be if natural gas does continue to climb higher around this range, that's where I would enter my short position, and that is around, say, $11.19, and I would sell it until $10.20, which is fairly where we are currently at right now. And the stop loss for that short position will be $11.60, so slightly above where I have this upper band. So how did I develop these trade models? I use the trading range from the day-by-day probability model. So this 5.5% comes from the day-by-day probability model, what we have here. And as we progress to the 5th day, we have a 75% chance for natural gas to fall between 0 to negative 5.5%, and to the upside, a 25% chance for it to climb between 0 to 5.5%, slightly in favor to the downside. And which one of these 8 models we should use as a reference? Well, first we want to use the line graph as a comparison. The blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below it is the one that we found on the line graph above. This trend dates back to January 22nd to March 6, 2015. Let's begin comparing both the trends. So what we have here is 1, 2, 3 points, and the trend in question we have 1, 2, 3 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out. And the model that we just examined and found and compared, back then natural gas was down roughly around 4.3%. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 75% chance between 0 to negative 5.5%. And if we examine closer on the technical performance on the current trend and compared it to the trend in the past that we just found, there are technical similarities, and there's no 50-day moving average because we're only examining a 30-day trend. So these models are available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.